Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Wednesday morning, middle of the week. Lots to talk about. Lots behind, lots ahead. I guess that's the best way to put it. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, good morning.
Hi, morning.
Morning, both of you. Welcome back, Nigel.
Morning.
It's a very important day.
Yeah.
There is the Fed meeting. Obviously, it's the Prime Minister's birthday. Wishes are pouring in, including from his good friend, Mr. Donald Trump.
Well, absolutely. That's the wish that the market has taken note of. And, we'll track that development as well.
I think that is a big talking point this morning, right? And interpreting that birthday. Did you guys ever get a birthday message? I don't think any birthday message will be discussed so much.
As much. Yeah.
Right?
Birthday diplomacy now, I think, from Washington.
It's power-packed. Let's just take it from the top in terms of what you need to know as we start this day. So first up, right, that birthday wish and the back and forth. So Prime Minister Modi thanked President Trump for birthday wishes. Both leaders underscoring closer India-US cooperation. Actually, why don't we put that up? The original birthday wish from President Trump and, of course, then the reciprocation from Mr. Modi. So just had a wonderful call with my friend, writes President Trump, Prime Minister Narendra Modi. I wished him a very happy birthday. He's doing a tremendous job. Narendra, thank you for your support in ending the war between Russia and Ukraine. President DJT. That's the exact reading of the social post that was put out. And of course, Prime Minister Modi is saying, thank you, my friend President Trump, for your phone call and warm wishes, warm greetings on my 75th birthday. Like you, I'm also fully committed to taking the India-US comprehensive and global partnership to new heights. We support your initiatives towards a peaceful resolution of the Ukraine conflict. Both essentially talking about the Ukraine conflict. So, and I think that is essentially what has sparked some amount of speculation whether because remember, we are dealing with the 25% tariffs purely on account of, the U.S. essentially saying that we are helping fund Russia's war in Ukraine, both mentioning Ukraine, Russia, Ukraine, ending that conflict. Are we getting closer to it? And I think we won't have the answer. There'll be lots of opinion, etc. But one thing is absolutely clear. What started about 2.5 weeks ago, that thaw is thawing still. Tensions were high. And now, of course, tensions have been smoothening out and they're coming off in a nice way. Timelines are difficult to put, but this is absolutely the good direction, the direction to go. Now, US and India, if there was that one day of talks which took place in New Delhi, and trade negotiators said that the talks were positive. Both sides agreed to, and I quote, intensify efforts to reach a deal. And of course, now the next round of talks will start. So that's essentially India-US, but I think that's the big dominant driver today. US equities, not very much. They kind of sort of drifted off record highs ahead of the Fed meeting. The Fed decision is tonight. S&P was down about 0.13%. The market is pricing a cut of 25 basis points. And I put this stats yesterday up as well. The dollar index so far this year is down 10%. US 10-year bond yields are down 50 basis points from the highs in May. So into the Fed pivot. And, of course, post the Fed pivot as well, we'll see what happens. Markets, of course, will gauge if this is a one-and-done kind of a cut or this is the start of an easing cycle. And that's where the commentary and the press conference from Jerome Powell, etc., comes into play. Because if it is the latter, then I think there is a bit more. If it is just one, the 25 basis points is absolutely fully priced in. What if you get the suggestion that, the Fed is now done with 25 and then we'll wait for data, we won't do anything now. There's a risk that the market sells off a little bit, pulls back a little bit as well, because this is a market which is at all-time highs, fully pricing in this at least 25 basis point cut. So in that sense, tonight becomes more important than other recent Fed decisions. Reports, US-China is the other one. Reports that TikTok buyers will include a group which has Oracle, Silver Lake, Andreessen, and a few others as well. But these are reports for now. But TikTok, of course, is a big one between US and China as well. Now, just to tie in the levels here, Nifty broke above its previous high yesterday. So we had a decent move which stayed with us through the course of the day, 0.7, almost 0.7 higher. Next stop is about 25,500, 25,550 basically. Nothing but, we've cleared most of the daily moving averages, hourlies, etc. You can look at the big retracement from the fall from the all-time high to the recent low, but we're not there yet. So 25,550 first is the first stop. Support is the 40 hourly, which now, of course, has been left behind at about close to 25,000. I mean, roughly 25,000 is the big level, which should not break on the downside. Bank Nifty, 10 days in a row, the Nifty Bank has been higher. It's closed above the trend line and the 40-day exponential moving average as well. So this one has also cleared most levels. Here, the retracement is 61.8% of the full fall. 55,175 is that number. The first immediate resistance by the way, we left off exactly there at 55,175. And then we'll see if there is more. But, I mean, we got to get a clearing off this level for further upsides. And support is 54,746. Gift Nifty will give you a quick sense of how we likely to start. And then we'll pick it up from there. Market's done quite well off the lows of about 24,400 was the low. And we are now, of course, looking at 25,200, 25,300 kind of level. So it's been a nice one-way lift that we've had coming into an important decision, which is tonight, the Fed one. Nigel is standing by with the F&O stats. Nigel, the big kind of sort of takeaway, especially yesterday, was it a lot of short covering? And how's that positioning moving?
Well, that's right. Good to see some bromance that's taken place overnight as well between President Trump as well as Prime Minister Narendra Modi. And that will definitely help sentiment. Now, in yesterday's trade, a couple of factors played out. One is that the institutions, they were net buyers. The FIs as well were net buyers. Institutions being on the buy side, that's positive. The second factor, as you pointed out, yes, there was a bit of a short covering bounce. And normally you have the live indicator during market hours. And clearly both the Nifty and the Nifty Bank were higher and the open interest was lower. So that told you that, in fact, there was some short covering bounce that played out. And that perfectly tallies in with what the FIs did. Because in yesterday's trade, close to around 11,000 contracts were covered out on the short side, though the FIs continue to remain aggressively net short at around 88% of their positioning on the short side. So, yes, there was a bout of short covering that did play out in yesterday's trading session. And take a look at what's happened in the last few days. We had highlighted this, right? In percentage terms, the net short positionings of the FIs, well, they were at around, at around that 92.7%. In absolute terms, it was 1.91 lakh contracts. So close to around 32,000 contracts have got covered out. And you have the markets that have bounced up close to around 2%. So maybe bulk of that short covering is still pending because the Nifty as well as the Nifty Bank are up only around 2%. And yet the markets are aggressively net short. That's from the FI perspective. So that's an important data point. Maybe the short covering bounce is still due even from here on. Moving to the options data then, the 25,200 call, the 25,300 call. Between them, close to around 30 lakh shares were added there. But just take a look at what the bulls did in yesterday's trading session. The put writing, that's come back into play. Close to around 50 lakh shares getting added out there. Aggressive writing is what you've seen. And because the put writers have come back into play, now you're seeing the PCR that's gradually moving toward the higher end of the range at around 1.3 or thereabouts. And yesterday you had the Tuesday weekly expiry that played out. So that could have been another element that pushed the markets higher. Moving to the levels then. The 25,050 to around 25,150 mark. That's the important band you want to look at. And you don't want that to break on the downside. Going by the options data, though, the 25,400, 25,450 levels, well, that's extremely important. The Nifty Bank, after underperforming, that's finally found its form, which is good times for the markets then, because that's bulk of the contribution on the Nifty. We have seen now it's conquered the 20-day MA. Good news. What's the next stop? You're looking at around the 100-day MA. So you're close to around 300 to 400 points away from current levels. That's where the next crucial resistance is at, 55,500 or thereabouts. Stocks that I'm looking at for today's trading session, one such stock will be Tilaknagar Industries. Yesterday, the stock bounced off the low of the day. It ended at around 20 DMA. So that's point number one. Point number two is there was massive delivery-based buying in yesterday's trading session in comparison to the averages. And point number three is it's been a relative underperformer in the last 1 month or so. And now it's seeing delivery-based buying ending at crucial technical levels. I'll keep an eye out on this stock even for today's trading session.
Okay, all right. So let's see if the bulls can prevail and continue their good run from yesterday, because yesterday, after taking on those critical resistance levels, they are looking in top form. And we have positive global cues. We have, of course, the tweets and the phone calls. And Asian markets, for what it's worth, they are tracking some gains as well, though it's a mixed picture across Asia. But some of the major markets, like, say, for instance, Hong Kong or Japan, they are tracking more gains, and there is overall optimism around that expected Fed rate cut. There you see the Hang Seng is up about 0.7%. Not that there's been a one-to-one correlation between China and India over the last couple of months, but generally positive sentiment on equities. Let's get you a couple of calls then. The first one's coming in from Morgan Stanley. Rhythm Desai of Morgan Stanley says that while India continues to report return on equity higher than global averages, the gap contracted in 2024, reflecting a growth slowdown in the second half of the year. He believes that ROE is set for higher levels over the next 3 to 4 years. He adds that rising ROE equals rising share prices, more so as it continues to significantly exceed long bond yields. He believes that ROE gains will come from mostly domestic cyclical sectors and rate sensitives, and the key risks would be global growth slowdown and higher global commodity prices. He says Morgan Stanley is currently overweight on financials, industrials, and consumer discretionary to gain exposure to India's improving ROE story. So those have been the big long calls for Morgan Stanley for a while. One more call. This one is from Vikash Jain of CLSA. He says that India remained the least favored emerging market for FIIs in August, with outflows of about $4.3 billion across all fund categories, making it the worst performing large market in US dollar terms. He says that FIIs are tracking another $0.1 billion of outflows, which is roughly $100 million of outflows so far in September. He says FIIs have rotated into consumer discretionary, driven by the GST rate cut optimism, with bulk of the allocation going to autos. He says that CLSA has added Ultratech to its India-focused portfolio for exposure to potential margin gains from continued pricing discipline and favorable GST changes. And they currently favor consumption, real estate, oil and gas, and IT in their portfolio. That last one's pretty interesting. So overweight on IT, that is CLSA for you. And they recently went overweight, saying it's a good tactical play. Anyway, let's now move on to get a global conversation going. Drew Pettit, Director, U.S. Equity Strategy and ETF Analysis and Strategy Research at Citi, is with us. Drew, thanks so much for joining in. So there's, bonhomie in the air because the U.S. President and the Indian Prime Minister are exchanging birthday greetings. More on that later. But I first want to start with the event at hand, and that's the Fed meet. So I guess everyone's saying 25 basis points is a given. But will that mean that these all-time highs continue for the U.S. market, even if data has started getting a little patchy of late?
That's funny. I think the last point you make there is the real key one here. Yeah, 25 basis points, as you've all said this morning, is completely expected by markets. Our house view is you are going to get some follow through. You'll get 25 basis points here. And then 4 following meetings, you'll get 25 basis points of cuts. Market expects that. We should hear a relatively dovish tone, more cuts to come, more normalization. Yes. But how do we work the market higher from here? It's if the data holds in. A little bit of softness and normalization in labor data is okay for markets because there's secular trends driving earnings growth higher, especially in the United States and just growth in general globally. So if the data is okay and the Fed is cutting, that's a positive for equity markets and risk assets.
And Drew, okay, so I mean, a little bit of weakness in data you're saying is fine. The market will take it in its stride and we have rate cuts. On a side note, I'm just curious, what do you think and what are you hearing around the possibility of U.S. companies now reporting earnings only twice a year instead of quarterly? What's the chatter around that?
Yeah, look, still really early days. SEC is the one and that has to make the call here. At the end of the day, earnings season has not been a bad one for U.S. stocks, as long as they beat and raise, given the growth expectations are high. For us, it'll make conversations more important around what could be driving long-term growth if you're not reporting as frequently. But ultimately, earnings, whether I'm going to get them quarterly or every 6 months, if the projections are up and to the right and productivity is still a major trend in the United States, that's still good for risk assets.
Drew, just slightly, it's a question of the first point, which is the Fed cut, etc. 25 basis points is fully discounted. What are the chances with this big AI rally that we've had that if, markets sometimes need reasons to react and we kind of sort of tend to attribute reasons one way or the other, depending on what happens. But could this be the trigger for a bit of a pullback in the US?
If it is a trigger for one, if it becomes a sell the news event, it's probably a healthy one. So markets should not just go up and to the right. We should have pause. We should have investors taking profits. That's a sign of a healthy bull market. If we are taking a breather, if there is a pullback because the news happened that was fully priced in, we think that's healthy. The really unhealthy kind of pullback would come if there's actually a dent in the earnings growth outlook, and we don't see that. So yeah, technically, I'd agree with you. It could be a sell the news type of event because it's fully priced into markets. But if the earnings estimates are unchanged and we get good reports for Q3 and good 2026 outlooks, it's a buying opportunity.
Hi, Drew. Good to see you. What about the Indian markets? The last I think I briefly remember was that you were, you're more neutral on emerging markets. So how you place between, emerging as well as developed markets? And where does India come into, your scheme of things? Because India has underperformed. The FI holding in the Indian markets is as multi-year lows. Your take?
Yeah, so it's interesting. We're underweight emerging markets overall as a global team here. And it's been interesting in the United States. From a dollar perspective, EM's outperformed, but from the flows from American investors, you couldn't tell. Investors have really stayed away from EM. So from a positioning perspective, we still like US mega cap growth on one side of our barbell. On the other side of the barbell, we like cheaper value cyclicals, which we think you get in Europe, especially European financials. For EM specifically, we're neutral India. And here you have a reasonable growth story versus the rest of the EM, but the pricing is for better than average growth. So neutral there. In EM, where we like to lean right now is China and South Korea, because you have the secular story similar to what we talk about in US mega cap. So it's funny, regionally, you're not really getting a lot of alpha trying to trade EM versus DM and country versus country. Yeah, again, getting away from certain specific examples, but the alpha is really coming from sectors and themes. So when we think about regional allocations, we want growth, paired with some cheaper value cyclicals.
All right, Drew, we'll leave it there. Thank you very much for joining us. Good speaking with you, and speak to you soon again. Appreciate it.
Hey, so thank you, everyone.
View coming in as far as Citi is concerned. We'll take a quick commercial break here. Let me just quickly run you through the interactions which are lined up here on the program. So we'll have the management of Yatharth Hospitals coming in, and there's, I think, a recent acquisition, and of course the outlook which we want to get through with Yatharth. 9 o'clock, we'll have Aditya Velekar of Axis Securities for an outlook at the metals space. Lots to talk about there. 9:20, Rana Gupta, Manulife Investment Managers, is a market master. 9:35. We'll have T.T. Ram Mohan of IIM Ahmedabad and Sanjeev Sanyal, Member Economic Advisory Council, who join in for a discussion on India's economic growth under Prime Minister Modi, who of course completes 75 years today. Following that, we'll be speaking with the team at Jefferies, Peter Forledza and Ashish Agarwal from the ongoing Jefferies India Forum. We got you lots of views yesterday as well. Towards the end of the program, Lata in conversation with the Managing Director of NABFID on the state of infrastructure financing.
Time to slip into a quick break. We've got a lot of stock-specific action to track for you today. We get to that in just a bit in our special Top 10 segment, but I'm running you through the list. L&T, Vedanta, BEL, Mahindra Lifespace, TVS Holding, and Coal India. All of them will be reacting to positive news flow. On the flip side, Amber Enterprises, Gujarat Fluorochemicals, you have Lupin and Dreamfolks that will be reacting to negative news flow. We'll keep an eye out on all of those stocks. Well, and as Prime Minister Narendra Modi turned 75 today, wishes poured in from across the country and across the world.
भारत ने दुनिया को युद्ध नहीं बुद्ध दिए। ज्ञान में, अध्यात्म में, गरिमा में, अन्नदान में, संगीत में, शाश्वत कविताओं में हमारा देश भारत पूरे विश्व में सबसे महान है।
Welcome back. Big day. All eyes on, of course, the U.S. Federal Reserve and all eyes on the exchange of pleasantries, the birthday greetings, the diplomacy that's taking place between India and the U.S. and direct leader-to-leader exchange that we've seen over the last couple of hours. And, you're seeing those flashes on your screen from the Prime Minister's message on X. Well, let's now get down to stocks. Pull up the implied open as well, by the way, because overall the equity picture is still pretty all right. Yesterday, the U.S. market had a flat close. But the anticipation is that we'll get that 25 basis points rate cut delivered. 65 higher because the bulls here at home have picked up their own momentum. So let's see. They probably want to build on it at the start. Time to talk stocks. So let's straight away get to our list of top stocks to watch this Wednesday morning. Kicking it off with Vivek. Vivek, why are you watching out for L&T? Good morning.
Well, good morning. An important development, and it'll be a lift of overhang, especially if this particular development fructifies. It's in focus on the back of the fact that we understand that the company has sent a letter to the Union Housing as well as Urban Affairs Minister Manohar Lal Khattar. What is L&T asking him? He's asked the centre or the Telangana government to take over the Hyderabad Metro Rail, where L&T currently holds over a 90% equity stake. So they intend to go ahead and sell this particular stake via the SPV route. What is the key reason of why L&T wants to exit this particular asset that they hold? Number one, they say that the project has now become financially unviable, and it's been unviable for quite some time. Number one, significant accumulated losses that the company is unable to recover. Number two, there have been funding leverage, especially coming in as far as the state government is concerned. Significant cost overruns during the construction of the metro, and along with that, there has also been an impact as far as ridership is concerned, given the fact that the state scheme to provide free transportation to women on buses is something that has significantly impacted the metro ridership itself. And along with that, all of this has ensured that the interest cost payment that the company currently owes as far as the debt is concerned is much higher than the kind of operating profit that they're able to generate. Just to give some context, in Q1 FY26, the loss of the metro was at a little over 200 crore versus a loss of 214 crore in Q1 FY25. FY25 PAT, remember, of the company was over 15,000 crore, where 650 to 700 crore was the loss that they suffer in the Hyderabad metro.
Okay, all right. Thanks a lot, Vivek, for that. Well, I'm tracking two companies, Vedanta as well as Coal India. Let's take Vedanta first. The NCLT hearing is today, and the market will be optimistic that maybe this could potentially be the final hearing. Even the management, in fact, they have indicated that they're hopeful that by September things get cleared out. The hearing will be with regard to the Ministry of Petroleum and Natural Gas issue, point number one, and with regard to the demerger as well. But just a few days ago, they resolved the long-standing dispute with SEPCO, which was relating to Vedanta's power business. Now, the arbitration claims by SEPCO were withdrawn, and this has helped in clearing one roadblock in the demerger plan. So going with a little bit of green on Vedanta, but I think at around 11, 12 o'clock out, we should get some clarity with regard to what is the outcome of that hearing. So Vedanta stock in focus because the demerger will unlock value. The next stock, Coal India, they've emerged as a preferred bidder by the Ministry of Mines for, one of the rare earth exploration blocks, and the name comes up for you on the screen, Ontilu Chandragiri. So, going with green on this one as well. Coal India actually has seen a good recovery from the recent lows after they reported some growth in the month of August in terms of dispatches. So green on both those two. But let's go to Nimesh. He gives us a sneak peek on D Street chatter with regard to a couple of stocks. This time around, Amber as well as Gujarat Fluoro. Bang on, Nimesh. Tell us more.
Well, so both stocks will be in focus on the back of the fundraising. I'll start with Amber first. The QIP is launched. They're looking to raise 1,200 crores. Will issue close to 15 lakh shares. The price band indication is between 7,791 and 8,000, which indicates a 3 to 6% discount to yesterday's closing price. So again, a 4.5% discount, 4.5% dilution for the QIP. So I'll start with the red because of the discount, and the stock is rallied as well of late. So that's the first name. The second stock is Gujarat Fluoro. Again, the promoter entity is looking to sell close to 13 lakh shares at a floor price of 3,500. So another, basically a 5% discount to yesterday's closing price. There is a 60-day lockup for the promoters to sell further, but given the discount, it probably will start in the red for Gujarat Fluoro as well.
Yeah, no, absolutely, Nimesh, and lots of deals which we keep highlighting every single day. Well, Vinny is standing by with a list of other stocks with news flow. Vinny, over to you.
Hi, good morning. So firstly, keeping an eye out on Lupin, the US FDA has conducted an inspection at its Nagpur's injectable facility. This was between 8th September to 16th of September, and that has gotten 6 observations. So some bit of a negative bias is what we could watch out for. Mild red to red is what we could see here. BEL, that's the one we'll keep an eye out on the back of an order win of around 712 crores. Since 1st of September, they've gotten these 700 crores. So in just the first 16-17 days of the month, they've got additional orders of 700 plus crores. These orders have come in for IT infra, cybersecurity, ESM systems, blockchain solutions, among some of these businesses where they've got the order. Mahindra Lifespaces, that's the next one we'll keep an eye out on, as they have been selected to redevelop 2 housing societies in Chembur, Mumbai. Combined value potential or gross development value for that is going to be around 1,700 crores. Dream folks expect red coming in here, as the company has discontinued its services for domestic airport lounges. This is with effect from 16th of September. The impact will be material. The contract, though, the company is saying with clients are still active, and discussions with clients are there for alternate customer businesses. Do not forget, 93% of their business comes from lounge services, and domestic business accounts to around 77% of their revenue as of FY25. So keep an eye on that. Lastly, TVS Holdings, we're expecting green here, as the board is to consider bonus and preference share issue. They will be meeting on 22nd of September for this, and do not forget, promoters are holding approximately 75% stake in the company as on date.
Okay, all right, Vinny, we'll keep all of those names on our radar. In fact, let's actually recap the list then. The stocks that have positive news flow around them this morning are L&T, Vedanta, BEL, Mahindra Lifespaces, TVS Holdings, and Coal India. Stocks with negative news flow around them would be Amber because of the QIP they're doing, Gujarat Fluoro expecting a block deal there, Lupin, as well as Dream Folks Services. Okay, so that's our list of stocks to watch. Now let's move on to the world of commodities and figure out how the commodity markets are gearing up for the Fed announcement. Manisha is here with us. Manisha, good morning.
Morning, Surbhi. Thank you for that. And I'll start with gold first because we have a new high on that. $3,700 an ounce has been taken. Now, to be exact, 3,703 is an all-time high till now that gold prices have hit. Well, the US dollar is at a 2-month lows, and the US rate cut of 25 basis points factored in, with more Fed rate cuts anticipated, is what the gold prices really seem to be moving at this point in time. And then you have various voices, banks, brokerages, experts talking about even higher gold prices from here. Though, of course, there is various caution as well, because this is overheated, overbought as a commodity. But with the way the international markets are right now, there perhaps is further momentum coming in for gold and silver both. The other one that we should watch out for is the crude oil prices. That one is trading at a 2-week high. The U.S. crude inventories have declined. That is supportive. The 22-member OPEC Plus group is meeting in Vienna on Thursday and Friday. Any statements from there in sense of global demand, supply, geopolitics will also impact the prices. And then you have Ukraine intensifying drone attacks on Russian refineries, export facilities, expectation of further Western sanction on Russia, and buyers of its crude are some of the other factors which are keeping crude in good favor.
Okay, all right. Thanks a lot for that, Manisha. Well, let's hop across to Sudarshan. He's gone through a lot of brokerage notes, and he's here to give us the call of the day. Hey, sir, good morning.
Morning, Nigel. So positive notes for the cement sector continue to flow in. Today, CLSA has written, it says that it has become more constructive and sees an uptick in profitability and estimates upgrades for companies helped by pricing discipline and elimination of coal cess. Amongst all the companies, preferred pick is Ultratech. It has upgraded Ultratech to high conviction outperform, and target is increased to 14,700. Upgraded Shree Cement to outperform, target is raised to 33,500. Upgraded Ramco Cements to hold, and target here is 1,045, and maintains outperform on Ambuja with a target price of 670, and maintains outperform on Dalmia Bhaat, and here target is 2,650. Next is Prestige States. Nomura has initiated coverage with a buy call, and target it has given is of 1,900 per share. It says company is transforming into a pan-India player while building annuity plus hotel portfolio. It expects FY26 pre-sales of rupees 29,000 crore versus company's guidance of rupees 26,000 crore with an upside risk. Also, it says company's annuity and hotel EBITDA rising 4 to 5 times over next 4 to 5 years. Investec has initiated coverage on auto ancillary company that is Bellrise Industries. It has initiated coverage with a buy call and target. It has given off 185 per share. It says company is well placed for growth as it expands its OEM ties, rolls out new products and improves ASP, that is average selling price. Also, four-wheeler business should see a significant step up on back of strong order book, and it expects four-wheeler revenue contribution to rise to 14% by FY28 and expects 30% profit CAGR over 25-28. And the valuation front also it finds very reasonable.
Okay. All right. Got that. Thanks. So we're going to keep a lot of those stocks on our radar as well on the back of positive brokerage commentary this morning. Need to take a very quick break. Come back on the other side and we'll be connecting with the management of Yatharth Hospitals. Talk about their new acquisition and the business outlook.
Welcome back. Hope you're having a good morning. Well, as promised, let's get straight to our first guest on the show. Yatharth Hospital, the whole-time director at Yatharth Hospital and Trauma Care Services, joins us on the show. Hi, Yatharth. Thanks a lot for joining in. Well, before we come to you, just stating to our viewers the three broad points that we're looking at. A 260 crore hospital was acquired in Agra. We want the guidance in terms of occupancies, which is currently hovering around the 65%, and also scaling up of new hospitals in Greater Faridabad and New Delhi. Well, thanks a lot for joining us, sir. Let's focus on the first point. You've acquired 100% stake in Shantived, all-cash deal, 260 crores odd. I'm just looking at the revenues of the acquired entity. The revenues are around 50 crores. 35% was the occupancy. I think ARPOB was around 31,000 odd. Give us some guidance. Once you take over this entity, how do you see the occupancy scaling out? What kind of revenue potential are you looking at? And in terms of ARPOB as well.
Hi, good morning. So the Shantived Hospital we have acquired in Agra. Agra as a city, we feel is a very promising market. There's around 2.4 million population Agra. If you look at it, it is even more populated than the cities of Noida, than the cities of Gurgaon. The sheer maths on this acquisition make a lot of sense for us. It's a big city in Uttar Pradesh. We already have a good brand spread across the state. The Delhi highway connectivity to Agra, the Yamuna Expressway connectivity to the city of Noida to Agra. So, when we saw the property, we really like the infrastructure. We feel it is the best infrastructure of the city. In terms of the doctor team who are operating the Shantived Hospital, they are quite renowned. The Prakash family, it's a quite renowned doctor family of the area. And we felt that if they are rightly supported with our added brand presence, with the more, the capex and the opex we're planning to do in that hospital, we feel that the occupancy, which is, currently 35%, can, triple in 3 years' time. And so would be the revenue. As far as the ARPOB is concerned, yes, we do expect 10% growth ARPOB in the Agra hospital for at least the next 3 years also. So overall, we are quite happy with the acquisition. We feel Agra is a great potential. It's a good, markets to be in. And, as far as it aligns with the strategy of expanding, not just in Uttar Pradesh, but across North India. Yatharth, just to talk about this, you've spent, I think, about 260 crores, right? It's an all-cash deal. Some argue that at 5 times sales, whether, it is expensive. And you're saying you'll have to put more money to work to ramp up occupancy, to perhaps increase the number of beds. Just give us your roadmap. How much more money are you going to be spending on this asset? And what is the ramp-up plan looking like? You said, you'll triple the occupancy in 3 years. But in year 1, will you be spending more on the asset? No, so there is no immediate requirement of any more capex that is required in the asset. What I mean by more money, if we feel, so right now the hospital is 250 beds. That is the expanded capacity. There is an adjacent land parcel just available behind the hospital. If we feel if we test the market in a couple of years' time, when we reach optimized utilization, a further 200 beds can even be created on that hospital and made on that additional land parcel, and we made it into a 400 beds.
Oh, got it. But Yatharth, no, I got your point. You're saying that there is potential, there is land, so if you have to expand. But I'm just curious, most, hospitals are operating at 60% occupancy, if not higher. I mean, 35% in, near the capital city. Why is it operating at such low occupancy in the first place? And also just tell us about the funding. How are you funding this 260 crores?
Right. So if you look at the occupancy that they're doing is calculated on the operating bed. Right now they are not operating at 250 beds. When we talk about the operational occupancy that they have, it should be close to 45 to 50% occupancy that they're having on an operating bed. Second is, also they've recently just empaneled with certain government schemes like the CGHS, ECHS, something that they were not doing earlier. Only around 6 to 7 months back is then they have empaneled with government schemes. They were largely focusing on private insurance and self-pay business, which still contributes more than 75% to their overall business. So that's why we feel, it's still early days as far as the hospital has the complete empanelments now. There's still certain super specialties that they were not focusing on, which we feel, when we will be there, we would be adding to those. So there's a huge potential in terms of the occupancy ramp up. Also, it would be easier for us because we understand the markets pretty well. Already there's a strong patient base from Agra who were coming to our NCR hospitals.
Sure.
And as far as the funding of this 260 crore deal is concerned, we feel that right now we have enough internal accruals to fund this deal. If required, that option is always there. So that's how we will be funding this acquisition.
Stock's done phenomenally well this year. It's up 40%. Low was, 350. And it's now up to about almost 800 rupees now. So that's Yatharth Hospital's view. Yatharth, good morning. Prashant here. Just a quick word in terms of where this puts you up with regards to growth aspirations. What should we work with? What kind of numbers on a CAGR basis for you?
See, I think we have always maintained that, for last 2 years, the company has grown at a 30% yearly growth in terms of our revenue is concerned. For the coming 3 to 4 years, we feel the company is still on that trajectory. This acquisition just solidifies our numbers much more. We feel that it also aligns with the strategy of expanding and acquiring at least one asset each year. That's what we have done for last few years. Last financial year, we acquired, in fact, 2 assets, one in Delhi, one in Faridabad. Before that, also each year we acquired one asset. And this financial year, that was the plan. I think the Agra deal aligns with that strategy. And going forward, we're committed to further, expand both in terms of greenfield, brownfield. Right now, with this acquisition, we are around 2,500 beds. We would like to grow in terms of our bed capacity in the coming years as well.
2,500 beds so far. And how many sort of visibility for how many more? Maybe hospitals being built in that sense?
Yeah, so there are 2 brownfield expansion that is already going on. 200 beds and 250 beds each are being planned in our Great Noida and Noida extension that would come into picture within 2 years. And by that time also there would be certain more greenfield or acquisition being planned. So as things stand now, we had taken a target of reaching 3,000 beds before the financial year of ending 27. I think we will be well ahead as far as that target is concerned.
Okay, Yatharth, we'll leave it there. Good luck. Thank you very much for joining us and really appreciate it, your time here on CNBC-TV18. Well, we're going to pivot back to the market and just a slightly more top-down, macro-ish kind of view, but important nevertheless. I spoke with Chris Wood of Jefferies. He's the global equity strategist at Jefferies, one of the most closely watched equity strategists. And he says that markets here in India, they've been sideways, at least at a headline level, for about 14 months, but they may continue to drift in 2025. It's not entirely impossible they do that. But he thinks a sudden US-India deal could lead to a tactical rally. So just want to play out a few sound bites. This is the first one.
It's quite conceivable that it wouldn't be a surprise if we traded sideways for the rest of the year. Now, if we get a sudden resolution of this US-India trade thing, that will trigger a short-term rally. But the more important point in India is, do we get a pickup in nominal GDP growth next year? Based on the monetary easing we're seeing under the new RBI governor, and based on the various policies to trigger a boost in consumption demand initiated by the government this year. I am assuming a pickup in nominal GDP growth. If I'm wrong on that, then I'm too bullish. There's got to be a 50% possibility of that, simply because it's quite clear that these 50% tariffs are rather anomalous. It seems pretty clear they were triggered by the US president's personal pique that he wasn't allowed to intervene in the India-Pakistan dispute. And it seems pretty clear from a US foreign policy standpoint, these 50% tariffs have needlessly antagonized India, and, it doesn't make sense from the US standpoint, from a diplomatic standpoint, to encourage an improvement in India relations with China. So for all these reasons, they're probably looking for my guess is the US is looking for some kind of deal. Korea's had a huge move this year, and most foreign investors have missed it, so they've been playing catch-up. And they've also been having to buy back Taiwan in terms of people selling India to fund Korea and Taiwan. If it wasn't for this Trump tariff issue, I think there would have been a chance that money would have started to enter India, in the last 2 months. But because of the Trump tariff issue, the return of foreign money has been delayed. But going into next year, for people who buy my story that nominal growth is picking up, I would expect FAIs to turn net buyers by the end of this calendar year, even if this tariff issue is not resolved.
Welcome back. That was, of course, Chris Wood with a big view coming in from Jefferies. Let's take the conversation forward. We have Deven Choksi for some stock ideas this morning. Deven, great to have you in. We were just discussing, the business with the hospital company with Yatharth. I don't know if you could hear that conversation. But generally, it's been an interesting space, and the sector leader, Apollo, has been a huge wealth creator. Do you have any favorite picks here in the hospital space?
Hi, Sirvi. Good morning. Well, I think the valuations are not allowing to re-enter into this particular space because the valuations are already discounting at least, many years ahead. And I think as a result of which, the stocks remain expensive. So that's a clear understanding that we have as far as ending the stock in the portfolio is concerned. However, we remain distinctly confident about the prospects going forward. The number of bets that each and every one of them, the larger ones you mentioned, like Apple, are adding into, I think they are suggesting that the higher amount of business and the continuity will continue. However, I think the correction in the price is always a better choice to buy into the stocks. I think we see relative valuation availability somewhere else. I think as a result of which, I think we don't chase the costly valuation. That's the only rationale.
Hi, Deven. Good morning. Good to see you, Ben. Let's focus on a couple of other names. Sudarshan just joined us. He ran us through a couple of brokerage calls on cement. And, CLSA is quite positive on a whole host of names. What do you like from that space?
Yeah, Nigel, good morning. We certainly like the players who are pan-India players and having the largest capacities, and that includes the likes of Ultratech and the Adani Cements. We believe that I think the larger the capacity, better would be the ability to generate higher amount of return on the investment as well. Also, there is the fact that I think with the kind of increase in the price that we are seeing, and on the other side, the cost of energy which is coming down is adding to the higher amount of profitability. So better capacity utilization, better ability to move the commodity from one end to another, which Adani possesses due to the port connectivities that they have. And at the same time, I think lower cost of energy and the better realization. They are allowing them to get better return also. So larger capacities are our preference also because of the fact that the growth in the cement sector as a whole is possibly, I think, moving to a next level. I think given the kind of next 3 to 5 years of consumption demand that we are seeing both from the infrastructure space as well as from the housing space. So remain bullish on the large capacity companies, Ultratech and Adani Cements.
Got that. So those are some individual names which we're discussing here at this point in time. Just Deven, if you will, we are getting closer and closer. Next week, of course, is the 22nd when the GST cuts, etc., are applicable. Is bulk of this move with regards to GST already all done? Or you think there is some left and it'll play out once people gauge what is actually happening on the ground? The general belief is the one category which is set to benefit the maximum is autos. What's your sense, Deven?
Yes, Prashant, absolutely. I think if you minus the uncertainty period between 15th August to 22nd September, which is where I think the most of I think the traders have probably preferred not to lift the stock from the factories because of the GST change coming in, that could be having a possible impact on the workings of the company for the September ended month. And that could possibly affect some part of the quarter two results. But if you minus that part of it, that situation, the next quarter, probably, I think you're going to see the surge in the demand. At least, I think the pent-up demand will also show the better amount of performance in the next month, along with the festive times. And at the same time, I think given the kind of lower GST, we are likely to see, I think, better amount of profitability for some of these companies, largely because of the fact that even though they pass on the current GST, I think they also have the advantage of, I think, increasing the price with a little larger volume, particularly in FMCG companies. You mentioned the automobile ancillaries. I think I would add to it the real estate companies. We believe that I think both these segments could possibly be beneficiary of the discretionary spending power which is there in the hands of the customer because of the higher demand for automobiles and the real estate. And at the same time, I think the cost structure, when it comes down, it adds to the profitability. It would be interesting to see how second half of the financial year pans out for some of the companies in both these sectors.
Okay, well, Devin, we'll take a quick commercial break here. We'll come back. Technical trades also coming up. Sudarshan and Mitesh are going to be with us as always as we run up to market pre-open, which is about 12 minutes out. Stay tuned. Okay, welcome back. 9 minutes to go for the pre-open session. We're, of course, focusing on Prime Minister Narendra Modi turning 75 today. And, of course, at the helm as Prime Minister for the last 10 years. How has the market fared under Prime Minister Modi? Hormuz is here with more details. Hormuz, over to you.
You know, as Prime Minister Modi celebrates his 75th birthday, what has the market not seen in his 11-year tenure as Prime Minister? Multiple geopolitical headwinds, right from Brexit to even healthcare crisis like the COVID pandemic. But the bottom line is that the markets have given handsome returns to investors during this period. And take a look at this. The Nifty Bank, both have more than tripled in value over Prime Minister Modi's tenure as Prime Minister. And we are taking this from the close of the 26th of May 2014 when the Prime Minister Modi was sworn in for the first time. But the actual merry has been made by the broader market names. The mid-cap index is up almost 500%. The small-cap index too up a similar quantum, almost 200-300% there as well. Sector-specific indices as well. The auto index is up 4x. The IT index is up 4x. The FMCG and pharma index both have grown 3x each during this period. And the other indices as well, the realty index, the PSU index, the metals index, all of them gaining anywhere between 150 to 200% over this last decade. And if you take a look at the stock-specific activity as well, take a look at the Nifty entrants. Of course, not all of them were part of the Nifty back then, but from there on, Trent is up 5,000%. Bajaj Finance has been the compounding story of the decade. Adani Enterprises has seen handsome returns. Some of the other names that have done well on the Nifty, Bharat Electronics, a reflection of the government's defense and Make in India push. Bajaj Finserv, Titan, the homegrown story as well, 1,000% returns for the Tata Group stock as well. So all of these Nifty names have done really well. Take a look at the banking gainers as well. Private financials, of course, they have been the ones that have led the Nifty higher. ICICI, HDFC, Kotak, almost 4x to 5x during this period. Federal Bank, EU Small Finance Bank, India's largest lender, SBI, also has tripled during this period as well. You take a look at the broader market gainers, is talking about the fact that the broader markets have made merry over the last decade. Take a look at these returns. APL Apollo up 7,000%, Dixon Technologies 6x, Solar Industries 5x, 2x. Masgaon Dock had an IPO price of around 144 and now trades well over 3,500-4,000 rupees. That is after adjusting for the stock split. SRF as well has been a multi-bagger over the last decade. Escorts, Kubota, BSC, Coforge, Motilal Oswal, Tata Elxsi, all of them seeing handsome returns over the last decade in excess of around 2,000%. You take a look at the small cap gainers as well. 20 constituents on the mid-cap index with 1,000% or more returns during this period. Now moving to the small-cap gainers, and they too are no far behind. Look at JBM Auto, Naveen Fluorine, PCBL, HBL Engineering, all of them gaining anywhere between 4,000 to as high as 7,000%. Aegis Logistics, PG Electroplast, Radico Khaitan, Zen Technologies, another defense name that has done well over the last decade, returns of around 2,500%. And compared to the mid-cap index, at least a third of the Nifty small-cap index, 31 constituents with 1,000% returns or more over the last decade. Moving forward as well, take a look at the PSU outperformers. Look at the defense, railways, the push of the government on defense, BEL, RVNL, IRCTC, all of them seeing very handsome returns over the last few years, over the last decade. HAL, HPCL, IRFC, of course, the recent listing, and despite the correction that the stock has had from the peak, the stock has delivered handsome returns from its IPO price. So all of them, all in all, it's been a decade of returns for market participants, be it in the index or be it the broader markets.
5 baggers or, 7, 8 times or 10 baggers, 11 baggers. I think people will take that with both hands over the last decade or so. Hormaz, very interesting data. Thank you so much for putting that in perspective for us. For the timing, let's look at the market here and now and talk about today's trading bets. Sudarshan Sukhani and Mitesh Thakkar are both with us. Gentlemen, good morning. Good to have you both in. So, yes, I think the market yesterday, the Nifty has managed to go past a lot of the resistance levels that we've been discussing with you over the last couple of days. The question is, what next? Mitesh, what's your outlook today?
Yeah. Good morning. So, we've been maintaining that the market will be upward bias and could hit the upper end of the range, which is basically 25,260 to about 25,320. That is a very important level. I think today we'll open around those levels. In case we fail to move decisively beyond 25,320, then there could be one leg of a pullback before the up move gathers momentum again. So I think that is the only question. I do believe that eventually 25,500 should be the next logical target. But given the fact that 25,320, 300 zone is an important one, traders should at least take some profits on the Nifty and see if there is strength or there is pullback. But on stock side, clearly the bias is on the long side.
Okay. Got that. Sudarshan, what about you? Looking at a long trade today?
Yeah, good morning. I'm very pleased. For the last 2 weeks, we have been saying go and buy the Nifty. And the Nifty went up 30 points, 50 points, 70 points. Sometimes it does that for days altogether. And yesterday it decided, okay, I really want to go up. But since the buying idea, the Nifty has gone up more than 500 points, although it was by stealth almost. The trade still remains to be a buyer. There is nothing to suggest that the market is willing or prepared to go down. It can, but we don't have any evidence. So what we do when the trend like this is in front of us is to raise our stop losses. From 24,400, we are now at 25,000. And today I would suggest 25,100 is your trailing stop. With that stop, you buy dips, buy consolidations. For those who are uncomfortable with the rally, always take profits.
Got that. What we're going to do is take a break here, come back and talk about individual trading ideas with both of you gentlemen. Stay tuned.
Welcome back. Well, as promised, let's get in Sudarshan as well as Mitesh back on the show and, in fact, get their stock picks. Sudarshan, you go first. What's on your radar?
Well, ICICI Prudential is a buy with a stop under 592. Grasim is a buying opportunity with a stop under 2787. United Spirits is a buy with a stop under 1304. And finally, Lodha Developers, which rarely comes in my list, but it has today, is a buying opportunity with a stop under 1174. It's an all buy list.
Got it. All buy list. Morning, Mitesh. What about you?
Yeah. I have majority buy calls today. 3 buys to a sell. For me, on the buying side is Bharti Airtel. A good breakout here from declining lines. So I would recommend long positions with a stop just below levels of 1920. We'll look at a target of 1980. Buy on IRERA with a stop at about 149. Here I would look for targets in the range of 159 to about 160. And a buy on Cyan. Big price and volume action there. So buy here with a stop at about 1242 for a target of 1350. A slightly positional call. And one sell call, that's MFSN. Keep a stop at about 1585. Look for targets of 1520.
All right, gentlemen, thanks very much, both of you, Mitesh and Sudarshan, for that. Well, the big movers from yesterday, right? We'll just quickly address it with regards to what lies behind the price action that you saw on the screen. Hormuz is here, as always. Hormuz, take it away.
Prashant, some interesting names that emerged on this list. Allied Digital Services was one such name, and yesterday's move was the biggest single-day gain since October of last year. Volumes were the highest since September of last year. Almost a crore, more than a crore shares that changed hands yesterday. You take a look at the 20-day average, that's only 1.5 lakh, and the delivery volumes as well were 14 lakh shares marked for delivery compared to a 20-day average of 80,000. And the stock is still down 21% this year and well over 40% below its 52-week high. The other interesting name is Cross, and that stock is up around 43% in the last 1 month. And over this last 1 month, we've seen increased trading activity in the stock. Now, from September 16th of last year till the 21st of August this year, the average daily traded volume was just around 5.5 lakh shares. From the 22nd of August till yesterday, the average daily traded volume has increased to 75 lakh shares. Now, yesterday's session, we had around 4.5 crore shares change hands compared to a 20-day average of around 60 lakh shares, and 10.5 lakh shares were marked for delivery compared to a 20-day average of around 5.5, almost 6 lakh shares. Now, why 16th of September is important? Because 16th of September last year was the day when the stock made its trading debut, and despite this 43% up move in the last 1 month, the stock is still below its IPO price. Now, Ixigo is the one, we spoke about this on closing yesterday. Third straight day of falls, almost 15% now in the last 3 trading sessions. Has given up all the gains that it had at the start of the month. And look at the volumes here. Over the last 3 sessions, anywhere between 50 lakh to 1.5 crore shares. Even yesterday, we had 1.3 crore shares change hands, 20-day average of 37 lakh, and 40 lakh shares were marked for delivery, which is a 20-day average of just 11 lakh shares. And the last name on the list is Orient Technologies, is the biggest single-day gain and volume since November of last year. We've had more than 10 lakh shares traded in a single session for the first time after March of this year. We had almost close to 30 lakh shares traded compared to a 20-day average of 1.5 lakh, and 6 lakh shares were marked for delivery compared to a 20-day average of just 72,000 shares. It has done well. It listed last year. The stock is up almost 70% from its IPO price.
Okay, all right. Thanks a lot, Hormuz, for joining in and giving us, all of those stocks that you spotted. Well, let's focus on another news piece that came in yesterday. Navin Jindal's, privately owned company, that's the overseas subsidiary, Jindal Steel International, they have submitted a non-binding bid to acquire Thyssenkrupp's European steel business. Now, this is important because, you need to keep in mind first, Jindal Steel is the listed entity, and this acquisition attempt is being made by the non-listed entity. That's separate from Jindal Steel, which is listed. To give you a few details about, the entity, Jindal Steel International, well, the financials in the past year, the revenue was around 12 billion euros, EBITDA margin at around 22%. And as per the release that they put out, they believe it's not too leveraged. To discuss this, what's the impact, we're joined by Aditya Velekar, the Senior Research Analyst at Axis Securities. Hi, Aditya. Good morning. Good to see you. Well, give us first your analysis of, Mr. Navin Jindal's unlisted entity trying to be a little bit ambitious. And do you think that it will have any kind of impact on sentiment on the listed entity, Jindal Steel? The problem is it's a large entity and the steel will be worrying about funding of this. Your take.
Yeah, good morning, Nigel. So thanks for having me on the show. So you are right. Means these kind of acquisitions, especially in Europe, we have seen that these are quite difficult. We have seen in the past how Tata Steel is still struggling with its European assets. So here, in this case, Thyssenkrupp Steel Europe is also they have a blast furnaces and integrated steel operations, and they will have to transition to electric arc furnace green steel. So if Jindal Steel International goes ahead and bids for this asset, they will also have to go through the process of restructuring those blast furnaces, mothballing those blast furnaces, taking the pension liabilities and solving the job cuts, etc. So all these process is slightly stretched and difficult to execute. One positive thing is that Thyssenkrupp Europe Steel has a very good portfolio of steel products, especially its automotive segment. And in Europe, Germany, it is one of the largest players. So on the positive side, it gives them access to European market where automotive segment is have a good exposure. But as I said, means Thyssenkrupp Europe has a 10 million ton of steel capacity, and most of it is blast furnace driven. So that has to be transitioned to electric arc furnace, and that process is slightly costly, and at the same time, it involves a lot of restructuring.
Yes.
So,
indeed. And what could the rough cost be, this transition? Because we have a benchmark with regard to Tata Steel Europe, right? I think it was 1.2 billion, if I remember correctly, 1.2 billion euros. But that was for around, I think, a 3 to 4 million ton plant. As you're telling us, this is a 10 million ton plant. So the cost could be very high?
yes, for Tata Steel, the cost was slightly lower. It comes down to almost $0.5 billion per metric ton, because it is an electric arc furnace. Also, we have to recall that they have got grant from UK government also of almost 0.75 billion pounds. So for them, that was slightly lucrative in terms of capex. But here, the cost, on a ballpark basis, the valuations run down to $1 billion per metric million ton for any kind of building electric arc furnace. Okay. So that is the ballpark cost we can take into account.
Okay, all right. And will you be worried about the listed entity, that the promoters being very, very ambitious? Or would you think that, they're obviously bought out both the Oman asset as well as the power asset. So at the parent level, actually, Mr. Naveen Jindal is in far better shape than, say, around 10 years ago when the street was very, very nervous about what's going to happen next. Do you think any concern for Jindal Steel shareholders, or no concern?
Yeah, Mr. Jindal has taken quite aggressive bets in international markets, and we have seen that in the past. And this Thyssenkrupp Europe is also quite aggressive bet. And on the listed entity, might be in a very short term, we might see some sentimental impact, but then the fundamentals of this listed entity is quite strong. So the Angul capacity will be doubling almost to 12 million tons and aggregate capacity to 15.9 million tons.
In short, Aditya, you're not worried for the listed entity, right?
Yeah, not in the short term, we might see some sentimental impact maybe today or maybe this week. But then, as I said, fundamentally, the company is growing. They are executing. They are increasing their capacities almost double at Angul. So, so may not be that negative as for now.
Okay, let's talk about Vedanta. Vedanta is having that hearing today. It's at around 460 rupees. In the last 1 year, the dividend would be around 52 rupees. So in that sense, it's been a decent performer, taking into account the dividend. Do you think there is still unlocking left in Vedanta? One school of thought is it trades at less than 5 times EV on EBITDA. The other school of thought is they deserve to trade at that particular valuation. Your take?
Yeah, Nigel, so you pointed out this dividend yield is quite lucrative, and that is one positive point for Vedanta. But only thing is that we have to track the deleveraging progress, and that remains quite critical. And this demerger will unlock value definitely, especially in the aluminium segment. But the deleveraging should progress, and the capital the capital management and deleveraging, whatever they are saying, from currently they're at Vedanta Resources level, the debt is almost at $4.7 billion, and at standalone entity it's 58,000 crores. So that deleveraging progress has to happen, and this demerger will unlock value, especially in power and aluminium segment. So that is on track. The valuations are definitely slightly lower as compared to peers, and that is due to the higher debt sitting at the holding company.
Yeah.
But yeah, so I think the key monitorable here is the deleveraging progress.
Sure, absolutely. That always is a key monitorable when you're talking about the Vedanta parent. Very quickly, Aditya, just to go back to Jindal and Thyssenkrupp. Now, this entity, I think, did sales of over $12 billion last year, annual sales. Then you have liabilities, pension liabilities of some 2.7 billion euros. Then there is this electric arc furnace additional expense if they're setting it up for 2 billion. I'm just trying to understand is, if you have a handle on this, what are valuations looking like, and what could be eventually I mean, the size of this bid or the offer, if you would even have a guesstimate, I think Chorus back then was over 12 billion euros, if I remember. I could be completely off. But in its entirety, what do you think could be at stake here in terms of the total quantum that Mr. Naveen Jindal will have to put up?
So on a ballpark, we can assume $1 billion per million ton. So if it's a 10 million ton capacity, then it's a $10 billion bid we can expect. I think that plant, that company, Thyssenkrupp Europe, has already sold 20% of its stake to one of the companies, but that amount is not disclosed. So they are going to sell another 30% to form a joint venture with that earlier buyer to form a 50-50 joint venture. But I think now with Jindal still actually going for a bid, that amount on a ballpark basis, we can assume $1 billion per million ton. So I think that is the figure that we can go for.
Yeah, right. So $10 billion, but we'll need to see, obviously, I mean, in terms of what the eventual structure, contours, and who the other participants are, if at all. Thank you, Aditya, very much for joining in. Quickly moving on, I think get to the 9-10 calls. Yeah, and the pre-open has settled. Nifty's up about 37 points.
So, Darshan, what are your 9-10 call?
It's ICICI Prudential buy with a stop under 592.
Okay. Mitesh, what about you?
I'll go with the buy on IRERA for targets of around 159 to 160.
Okay, IREDA is Mitesh's call on your screen now. Now, the big talking point, same time tomorrow, is going to be what the Fed has done and what Jerome Powell has said. So Chris Wood of Jefferies, the portion that he addressed the Fed on, his point is very simple. He says if it is one and done, market doesn't do anything. If the market gets a hint that there is more coming after the first cut tonight, which is fully priced in, the US markets may see a melt up. Listen in.
But what's clear is the Fed has decided to prioritize the labor market over inflation. And I say that because the inflation is still significantly above the 2% target. So in this environment, clearly there's potential for more of a melt-up in the US equity market on the Fed easing. And you can make a perfectly respectable argument that the Fed shouldn't be easing yet. But the reality is the Fed is going to ease. I remain constructively bullish on gold. Actually, I set a target of $3,600 an ounce for gold back in 2002. It's finally reached that target. Frankly, it should have reached that target 10 years ago, given all the crazy things that have been going on with G7 monetary policy. So at least we're now reaching more for sensible levels in gold. The short-term issue for me was gold going to break 3,500. So now we've broken 3,500, so it's beginning to look like gold's entered a new trading range. I remain structurally bullish on gold, but the really exciting story right now is the gold mining stocks. Because the gold mining stocks have been underperforming bullion in this bull market that began in 2022.
Okay, both Bitcoin and gold are, both found in Chris's portfolio. More later. Just want to recap some of the stocks we put out in the morning with regards to news flow. L&T, Vedanta, BEL stocks will come up in terms of how they closed at the end of the pre-open session. Mahindra Lifespace, TVS Holdings, Coal India. These are a few other names which should come up. There is also Amber Enterprises, Gujarat Fluorochemicals, which are going to be coming up. Lupin, Dreamfolk Services, of course, on the negative side. So there is a bunch of names, not huge in amount of news flow. It's been a bit quieter news flow-wise, but in terms of some of the single stocks, there is one or two. We've got market open coming up in a few seconds from now, so we'll just address that. What do we have? 25,280 on the Nifty. We're about a 0.25% higher, as indicated by the pre-open. The Nifty Bank, 10 days on a trot, that index has been higher. It's a little quieter this morning. The small cap index, no problems, 0.5% higher to begin this Wednesday morning. And the small cap index will come up on your screen, 0.5%. Mid cap index will come up as well. So I think around 0.5% there. A third of a percent higher in the mid cap index is what you have. Nifty heat map gives you a quick sense of how things are opening up on the index. And what do we have? Tata Consumer on one end, and they've got SBI Life on the other end. Which are starting, but it's overwhelmingly up and about. Remember, the Nifty yesterday took out the prior high, the previous high. It's taken out all, daily and hourly averages, etc. So maybe a bit more extension here, 25,500 or so, the first stop, 25,300 for now, with about a 60-odd point higher start as we begin today's session. Surbhi.
Okay, Tata Consumer, top position. Yesterday, the company announced that it will be offering the price benefits on its tea portfolio to customers. Not sure that would be the lone reason why the stock is up 3%, but it's a big mover today. The other one is Coal India. Coal India has emerged as the top bidder for a rare earth block. Market's getting a little excited about that. 1.5% up on Coal India. BEL is continuing its good form from earlier this week, 1.5% higher. Ultratech Cement, along with a bunch of other cement stocks actually, because of positive brokerage commentary. Some of the others like Shree Cement, etc., are also up and about. Then what do we have? We have Tata Motors, Trent, Grasim. There's Infosys. So it's pretty mixed. There's also Reliance, there's Maruti. So really lots of legs to the market up move, 50 points higher, and overall looking good. On the flip side, let's see, Adani Ports is cooling off. Pharma is not in favor today for sure. Cipla, Dr. Reddy's and Sun, all these stocks are down. But that's about it. Some pharma cool off. Otherwise, most of the nifty constituents are nicely chugging along this morning. Nigel.
Well, that's right. Just keep an eye out on a few stocks, that are moving higher in decent volume. Skytex Garments, the stock is up closer around 4 to 4.5% or thereabouts. Year to date, it's still down closer around 4%. But good pop-up is what we're seeing. Reddington was one of the stocks that moved very, very well yesterday. Today as well is building onto the gains. It's up closer around 3%, one of the top volume movers. Aditya Birla Fashion, they have launched value retail brand owned. They plan to open close to around 100 stores. The street likes it. One of the top movers today. Belrise, Investec had come out with an initiating coverage note. And that's why, in fact, you have that stock as well that's reacting to that piece of news. Keep an eye out on a couple of these names like Gokul Das as well as Wellspun Living. When you see some bonhomie between our Prime Minister, Mr. Narendra Modi, as well as the US President, Mr. Trump, then these stocks, after getting hammered when the tariffs went to 25% and then from 25 to around 50%. So there is hope building up out there. That's why Wellspun Living as well as Gokul Das, both of them up and about in today's trading session. On the flip side, Gujarat Fluoro, the stock is down is because that large trade was awaited. That's got cleared out of the way, down close to around 2.5%. You have MobiWik, that saw a big rally. That's cooled off a little bit. But otherwise, a decent opening to kickstart trade. 25,300, the bulls will be thanking their stars.
Absolutely. And there is suddenly some sort of life and vigor which we are seeing in markets, at least at index level. Otherwise, it's been about single stocks and there have been so many 50, 60, 70% kind of movers, but the index, of course, has not gone anywhere for about 14 months now. This is the 14th month in that sense. Rana Gupta is with us. He's Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Do you think what we've seen, this 800-point move, is the so-called tactical rally in anticipation of some kind of a deal with the US? When I say a deal, I don't mean a full FTA, BTA. I mean this 25% getting knocked off. Or do you think if that were to happen, then you will get a tactical rally from here? What's your sense?
I think let's step back a bit. I think the market is in the 24 to 26,000 range for last 1 year now, as the earnings cuts have happened and then the domestic economy has moderated somewhat. But going forward, we see there's a GST cut, income tax cut in February, RBI rate cut, adding up to the stimulus side, which kind of nearly offsets the headwind from US tariffs. From here on, if US tariffs were to go down, then this will turn into a net stimulus, and that could be pretty positive for the economy as well as the markets in our view.
Okay, so from here, what will you watch, Rana? Is it just a game of waiting till growth picks up? Or are there any indications? I'm sure post the 22nd next week when these cuts go into effect, the street will want to see across product categories, consumption-wise, where are things picking up to expectations, because many of these sectors have reacted already in that sense.
Oh, absolutely. So I think irrespective of the rate, if and when US tariff goes down, it will be net positive to the economy. And even before that, even if let's say that were not to be the case and tariff were to stay at elevated 50 or 25% level, the government has given significant incentive through income tax cut, GST rate cuts. So therefore, we believe the following three sectors or subsectors should see benefits, and that's why we are watching. Number one is auto. Auto is interest rate sensitive, plus For the last 2 to 3 years, barring SUVs, the sales have been pretty flat. So we expect definitely momentum to come back in that segment. Second, I think as a result of price of essentials going down, we do not think a person buys more of toothpaste and more of tea and all of it, but the savings on essentials can be spent on things like, let's say the food delivery, quick commerce, buying insurance products, or travel. And here, some of the internet platforms have very dominant presence. And third, in consumer durable. And we prefer playing the consumer durable through the manufacturing route. And also in the past, we have discussed that consumer durable electronics, these are growing areas, and how Indian companies are garnering more share by manufacturing in India. So that's the EMS part, that's also we like.
Okay. By the way, just looking at some more stocks on the move, Reddington has started its run again. Yesterday, it was a 20% move. Today, it's 4%. Not sure if this is just sentiment ahead of iPhone. I think it's 17, right? The latest one is 17. Those sales, I think, kick off here in India today onwards. Not sure if it's just sentiment driven or something additional. But that's one for sure. Credit Access about 3% higher. Watch out for the exporters. Gokuldas Exports is soaring 5% higher on this expected breakthrough, some sort of a breakthrough in those tariffs. And Gokuldas is definitely on the move. Rana, great to have you in. On the exporters, actually, let me take up that piece. How do you look at them? Because the thing is, they're high-risk sectors, given all the tariff talk, whether it is your shrimp exporters. And, we had favorable news coming in from the EU, and the shrimp exporters completely went through the roof for two sessions. And there are the textile exporters, apparel exporters. Do you like this space at all? Are you playing it or totally avoiding?
So for investors like us, we like a bit of predictability, stability, and some right to win. India's textile export, while competitive, agriculture and other exports, they face stiff competition from some of our neighboring countries. So therefore, I think when the tariff goes up, they will react negatively, and the tariff goes down, they will react positively. Underlying business is perhaps stable, but the stock price are not as much. So therefore, what we prefer among AAA exporters are the companies or the sectors where India has a right to win. And you can think of sectors like pharma, CDMO. In the small molecules, I think a lot of CDMO activity happens in China, circa 90%, and that's very high. And logically, even without going to geopolitical reason, I think there is reason when a country or a geography accounts for 90%, you begin to slowly diversify. And outside China, perhaps a bit of South Korea, India is the only place that can have that kind of domain expertise, which can support that kind of shift. So there, I think we like, and because this sector, India has a differentiating edge, and it's pretty difficult to compete with the Indian expertise, cost structures, and the product quality. So that's one sector on the export side we like.
All right. Hi, Rana. Good to see you in. What are the odds, though, give and take everything, after India's recent underperformance? Do you think, that premium as well that we enjoy in comparison to the other emerging markets, well, that's not a little bit, right, post this spate of underperformance. But we're still at around 55% premium in comparison to the peers. Do you think from here on, if you have a 12 to 18-month view, Indian markets will relatively outperform after underperforming?
I think from here to 12 to 18-month view for Indian markets to come back to our performance, that tariff where India is ahead of India is worse off as compared to the Asian countries need to reverse. Most of the Asian countries are in 15 to 20. It needs to come back to at least that much for Indian market performance to resume. But let me add a bit more color to the India's underperformance and what's really going on. If you look at China and South Korea and Taiwan, the markets which has done well, or even Singapore for that matter, there are two legs to the story. One is AI, and second is the government or the regulator doing some terms of juice up or doing some value unlocking or giving some stimulus. In India, the AI leg is missing. Of course, the government leg is now kicking in. Now, emerging market investors' portfolio cannot be only AI. They would want to be emerging market consumers. And for that, India is the best place to go. Now, if the tariff remains high and given the stimulus given, I think India consumer and that sector will remain an attractive place. But once the tariff rolls back to in line with other Asian countries, I think then there is a case to buy other sectors, including the financials and the exporter sectors and all of them. So in short, I think even without tariff, Indian consumer sector looks pretty good. And for Indian markets to come back to our performance, I think the tariff needs to come down at least to the other Asian markets level.
All right, let's talk about the BFSI space then. In the past, I think we've discussed about that the NBFCs are a space that you like in comparison to banks. How are you positioned right now on the banking and financial space? What do you like out there? And, between NBFCs and banks, and within banks, PSUs versus private, your take.
So in the BFSI space, with the RBI rate cut, we were quite positive on the non-banks as well as the private banks. On the non-banking side, we continue to remain positive on the large companies. Albeit, I think in the smaller non-bank NBFCs, which lends to a commercial vehicle or micro lab or small SME, there is stress, and there is no denying that. So NBFC, our view is pretty nuanced. I think the larger ones are okay. The smaller ones will still face some asset quality challenges. Something like a microfinance seems to be coming out of it, whereas the small lab, small SME and single CV and all that, they seem to be going into it. So again, one has to be very nuanced in which non-bank one has to go. Bank, we have continued to like the private banks. And I think as the consumption picks up, private banks will do well. See, private banks kind of underperformed in the later half of the decade last year also because the government stimulus policies were towards the industrial side. And the industrial side benefits the PSU banks much more because they are those corporate capex lenders. Whereas if our thesis is right, and this time round, the rally, at least initially led by the consumer sector, we do think the large private banks are at a pole position and they should do well. Their balance sheets are solid, their return ratios are good, and the valuation is not excessive. So we continue to like the top private bank space.
Yeah, no, absolutely. Just a bunch of other names, right? We got about 4:1 in terms of advances to decline ratio, and it's looking looking pretty solid in the broader market space. Even though for the Nifty it's about 50 points so far. Maybe just a few names, right? Reddington had a big day yesterday. And it's up about 1.25% this morning, but it's got the largest volumes on the NSE. Persistent is up about 3%. Persistent coming up with large volumes again. There's a 17% move on what is this? Platt IND but it's got the third largest volumes on the NSE. We'll try and see which one this is. Aventel is up about 2%. Tata Chemicals is up 3%. KRBL, we spoke with the management, I think, day before yesterday, 2.5% higher in KRBL, 414. Premier Explosives, big explosive move, 7% higher on tremendous volumes as well for this point in the day. And you'll see that coming up on your screens. There's Wellspun Living, about 6% gains here. Gokuldas, of course, back above 800. And I can go down the list. There's Castrol, KNR Construction, Mahindra Life Spaces. It's picking up quite nicely in terms of volume-led gains. Credit Access, just looking at Credit Access, the low in, this year was about what? It's basically not doubled, but low was about 750. And stocks, 1350 now on Credit Access. So big one from the lows coming through on that one. Rana, just a last quick word on this entire data center opportunity. We've been having this discussion last couple of days. Any stocks here that you own in your portfolio on the back of it? That is the pointed large theme, the reason why you own a name.
So data center is, of course, a big opportunity, but the data center requires a lot of capex. And we think, based on our understanding in India, what's happening, the larger players are going to win. In terms of if you want to distill it down to the stock, it will be these companies are very large, one of the largest groups that you can think in India. So how much data center will add to the stock price is a matter of debate. Nonetheless, I think the larger telecom companies in India, they are doing very well in data centers. And going forward, as data center revenue picks up, they will become a quasi data center kind of a play going forward. But right now, the contribution of data center in the total valuation is quite low, but it's going to increase over a period of time.
Okay. All right, Rana, we'll leave it on that note for this morning. Thank you very much for joining in and giving us your perspective on the market. Well, before we introduce our next set of guests, a couple of other stocks that are worth noting. Let's pull up IEX. IEX has actually gone ahead and challenged this market coupling order. Remember, that's sort of pretty disappointing for their business because they lose their monopoly on the power exchange business. And now the company has filed an appeal. Let's see where this goes, but that stock's on the move. The CLSA note on cement that Sudarshan was talking about earlier, That has been noted and picked up by the market as well, because most of the stocks on which CLSA has a positive view, either an outperform call or a positive call, they're all up and about, starting with Ultratech. Shree is also higher. Dalmia is up about 1.5% as well. So some of these stocks are in focus. That's on the upside. And on the downside, I just want to point out Dreamfolks. I mean, it is little to say now, but it's just been a very painful journey for investors. Same time last year, 1 year back, Dreamfolks used to be a 500 rupees stock. Today, it's under 150. The entire business model has been completely, is decimated, too strong a word? Maybe not. It really has been in this case, at least. Well, with that, let's move on. Do we have our next set of guests with us? I think we do. And of course, we are talking about Prime Minister Narendra Modi's 75th birthday. As we've been noting, of course, greetings have been pouring in from across the country, around the world. Political leaders, party workers, citizens, all of them expressing their wishes and gratitude. And of course, India is on the global stage, on the global map, navigating some pretty important headwinds, including, of course, those US tariffs as well. Our colleague Shivani Bazaar is here to understand and take us through some of the most important economic reforms and economic policy measures that have been undertaken under Prime Minister Modi's leadership.
Well, yes, Narendra Modi's 3 terms as Prime Minister have been defined by bold, large-scale economic reforms aimed at making India a modern, digital and globally competitive economy. One of the first big reforms was GST in 2017, replacing dozens of state and central taxes with a single one. This created a common national market, reduced evasion and simplified compliance, especially for MSMEs. At the same time, Jan Dhan Yojana brought over 450 million bank accounts into the system, enabling direct transfers, digital payments and true financial inclusion. Combined with ease of doing business reforms, India's global ranking jumped from 142 to 63 in 5 years. Now, in the second term, reforms went deeper. The Insolvency and Bankruptcy Code cleaned up the banks, while Labour Code simplified over 40 laws into 4, balancing worker protection with global business needs. During the pandemic, Atmanirbhar Bharat and PLI program boosted local manufacturing, agriculture and MSMEs, generating jobs and reducing import dependence. And then a 1 lakh crore rupee R&D fund further fueled startups and high-tech innovation. Now, in the third term, the focus is on future technologies and sustainability. The semiconductor mission is building a chip ecosystem, while the India AI mission, with over 10,000 crore rupees of outlay, is powering startups and research. Simplified income tax rules, an ambitious clean energy goal of 500 gigawatt by 2030, and also the EV policies are positioning India as a global green tech hub. So from GST to Jan Dhan to PLI, AI, semiconductor and clean energy, PM Modi's reforms are deep, structural and future-ready. They empower millions of entrepreneurs, innovators and workers, laying the foundation for India's long-term growth story. Back to you.
Okay, well, those are, of course, just some of the many, many reforms and policy measures that we've seen over the last decade or so. Let's take this discussion forward. We have 2 experts joining in. We have Mr. T.T. Ramamohan, former professor of finance and economics at IIM Ahmedabad. And we, of course, have with us Mr. Sanjeev Sanyal, member of the Economic Advisory Council. Gentlemen, good morning. Thank you so much for being with us. Sanjeev, if I could open with you, we're having this discussion at a very, very interesting juncture. It's also a special day for the Prime Minister, right? And what better than getting a greeting from his quote-unquote friend, Mr. Donald Trump. How do you assess how India has navigated the last couple of difficult months where there is, we're at an intersection of foreign policy objectives, defense objectives, economic and trade objectives, and the need to spur the domestic economy against external headwinds? How do you rate the response so far, and what more should citizens and investors expect?
So if you see how we have responded to this entire tariff thing, you will see our policy has been very consistent. First of all, we have never escalated the matter. At the same time, we have stood our ground. So we think we are being reasonable and we are not going to bend. Many other countries have, but we have not. But as I said, we have at no point escalated matter. Whenever we have had a friendly overture, we have seen Honorable Prime Minister respond positively. So the idea here is that, look, as a rising power, we need to signal to the rest of the world that we can stand our ground. I mean, quite apart from standing up for our own interests, as we also need to show that, we are a power of some standing. And in that sense, we have, as I said, signaled clearly where the red lines are, and we will stand by it. So I think this is not just a issue about tariffs or standing up for Indian interests. I think what it signals to the rest of the world is that India is now no longer a pushover. And at a time when major economies like Japan, like the European Union, and many others have been quite happy to bend over, we have not. So I think in that sense, this is a very important geopolitical move as well.
But Sanjeev, the other part to my question, the domestic response, while we've stood our ground internationally, we've chosen to perhaps start a sort of dialogue with China. The GST cuts here, a different approach by the RBI. Is all of this enough, or does the economy need more at this point?
So what I will say is that, look, the economy has good momentum. It's growing at 7.8% in the first quarter, came out stronger than I expected as well. But the fact is that this is being achieved without any macroeconomic instability. So inflation is, in fact, at the bottom of the MPC's target range. The current account is basically flat, 0.2%. Deficit is nothing much. We've just recently got an upgrade as well. The banks are in rude health. So if we cannot take the pressure from the negotiations now, when are we going to do it? So I think we are in good shape on that front. If the economy needs some more support beyond the GST cuts and other things we have done recently, we have even more ammunition in the pipeline. I mean, we can do things on the monetary front, on the fiscal front, and of course, we are continuously doing ease of doing business and other reforms. So, we do have more ammo in the pipeline, and it will be used.
Gentlemen, morning. Prashant here. Sanjeev, and I think you've spoken about process reforms, right? Lesser talked about, but having an outsized impact as and when they happen. Just a quick word in terms of just are we, Sanjeev, finally seeing, and I think across, when we speak with bankers and people who fund the economy, both banks, NBFCs, etc., they all say that one of the things which needs to perhaps be focused on now from a domestic perspective is, this K-shaped recovery which began in 2020. That is, I mean, we're still seeing a continuation of that, and banks and we can see credit growth numbers, etc. They've kind of sort of dropped off at the mass end. You can see it across sectors, across categories. Is the focus now shifting to that segment in a big way, Sanjeev, in your opinion? I just wanted your thoughts. First, shift from infrastructure to consumption. Of course, it's going to be both, but maybe a little bit more on consumption now. And then at the mass end.
So what we need is a balanced growth. But I disagree with your idea about K-shaped recovery. I think the recovery was fairly well balanced. And I think we do need to push for more productivity and efficiency. So if you're thinking of the GST reforms we have just done as purely a consumption push, then you are mistaken, because essentially at the first instance, the real benefit of that is that we are removing the frictions in the system to basically keep growth going. Now, it also benefits consumption, but the idea is not merely to boost consumption. The idea is to make the system much more efficient. And we have been always consistent is that ultimately what you need is job growth. And job growth comes from higher economic activity. There is no such thing as jobless growth. In the history of economics, that's never happened. So sustained growth over long periods of time is what generates growth. And we have seen that as we have recovered out of COVID, that sustained growth has in fact caused the inflation rate to come down very significantly. And despite the fact that India is adding, because of its demographics, millions of people into the workforce every year, we are able to absorb it. Now, maintaining this growth momentum is absolutely critical. And so while yes, we will do demand management, obviously, but making the country more efficient and making it more competitive in the global scenario, adding ourselves to the global supply chains. These continue to remain critical things that we are thinking about. The supply side is, in the long run, far more important than demand management.
All right. Good morning, gentlemen. Good to see you all in. Well, Mr. Mohan, coming across to you. Under our Prime Minister's leadership, well, India has scaled digital inclusion, infrastructure, global stature as well. The road ahead is going to be important, though. We need to sustain this high growth, quality jobs, private capex, maybe some more deeper reforms as well. Trade, manufacturing, finance, that's top of mind. How would, what would you say about the last few years for India? And what's top of mind in the next few years?
Well, the record of the last 3 years is clear enough. We have recorded growth of 7.8%, which is way above anything that any analysts and commentators had predicted. So I think one of the things that is notable about the performance of the present government is that it has consistently produced surprises. I think one of the biggest surprises was that we entered COVID with an NPA level of, I think, close to 6%. And the betting was that with a shock of that sort, the NPA level was bound to go up in the system. What else do you expect? But lo and behold, the NPAs actually started declining post-COVID. So I think I think this government has developed the necessary macroeconomic tools to deal with crises of various kinds. And I think it is somewhat premature to talk about sweeping reforms at this point, because what we are facing now is a situation of unprecedented certainty. It's very difficult to for private investors or even for the government to plan very far ahead until the entire tariff regime settles down. And the priority in this system, the priority in this situation for the government must be to reduce uncertainties of any kind. And here we are very well placed because we are looking at a growth forecast of 6.5%. And if the present tariff regime remains in place, which is 25% plus 25%, we are still looking at something like 6%. And given that this is the baseline forecast, and we have plenty of flexibility on the monetary side in terms of monetary easing and fair degree of flexibility on the fiscal side, I think we are very well placed to respond to this situation. But I think one shouldn't be in a hurry to roll out reforms because many of these reforms are sector specific. And it'd be very difficult to have a clear view of what precisely reforms are needed until the situation settles. But the model that we have followed so far, which is that the government takes the initiative in pushing investment, particularly investment in the public sector, particularly in respect of infrastructure. Now, this is an approach that paid off very well during the COVID crisis, and it was backed by liquidity support for private enterprises as distinct from fiscal support. So I think that is a model which we should broadly adhere to in the present situation till the dust settles down.
Sure. Okay. Gentlemen, I just wanted both of your comments on our engagement with China. And while, of course, we work with the US side to see if there can be a de-escalation of sorts on trade, the other, important segue that opened up after the SCO summit was the way we will engage with our neighbor. Sanjeev, your thoughts here, and I'm not getting into the foreign policy and the security aspects of it, but purely in terms of having a trade relationship. We know about the high surplus or the high deficit we're running with China. And then there is the Indian industry, which is used to a high degree of protectionism from everything Chinese. Has the time come to change that? Are we ready? What would you advocate here?
So I think here we have to take a balanced approach. On one hand, we have been very clear that we don't want to join RCEP, for example. But on the other hand, the fact is you can't wish away China. China is the source of a lot of inputs into things in which we are planning to be a part of the global supply chain. So if you want to be a part of the supply chain, you cannot wish away the fact that China is such an important supply of all these inputs. So in that context, I think the idea is that we be pragmatic about it, where we need their inputs or even investment. we should find ways of engaging with them. But at the same time, we have to say that there are interests that we need to protect, and those should be protected, which is the reason that it's probably not a good idea to get into something blanket like the RCEP. But yes, the fact that we are now seeing a normalization of relations with China, starting with the Honorable Prime Minister's recent visit to China, I think that's a step in the right direction.
So many more questions, and we'll continue this discussion, and we'll invite both of you back on this program. For now, thank you very much, Sanjeev and Mr. Mohan, for joining us here on this program on this special day. Well, I just want to quickly make a mention of Urban Company, which has made its debut. So I think the pre-open is settled in terms of the listing. The price has been found, and those are shots which are coming in straight from the NSE. I think these are pre-ringing the bell shots, which will come in at 10 o'clock when the stock starts trading. But we should put the flash up. I think it's settled at about 162 rupees. And they sold stock at 103 odd rupees or so. So that is Urban Company listing. I think, 100 times subscription? There you go. That's what I'm talking about. 161. 56% premium on top of the issue price. We'll take a quick commercial break here. We'll come back more on Urban Company, but also we'll go to the Jefferies conference, which is happening in Gurgaon. Peter Forlenza and Ashish Agarwal will be joining us from the sidelines of the conference with what the investor mood there is. Stay tuned. Welcome back. So we've got the market, which is up about 80 points, 25,320 is where we are at. Well, let's go across to the Jefferies conference, which is underway, day 2 in Gurgaon. It's a big one, a 4th investor conference, India conference for Jefferies here. Peter Forlenza is Global Head of Equities at Jefferies. Ashish Agarwal is India Country Head at Jefferies India. Gentlemen, great to have both of you here. Appreciate it very much. Ashish, let me get a quick sense from you. I mean, what's been the feedback so far, and what's the one question you're getting most from investors, and if you're getting some questions from corporates who are there as well?
Thank you, Prashant, for having us. We've got off to a great start. We have almost 270 odd investors at the conference and about 120 companies presenting. A variety of topics ranging from capex to AI to consumption, everything. The one question which is definitely on the top of every single investor is when will the capex cycle from the private side revive, and what will be the impact of consumption from the GST cuts that the government has announced. Indian markets have been sideways for the last 12 months since our previous conference. Relative valuations for India have corrected meaningfully. So every single investor is looking for when India starts to participate or drive the EM rally that we have been seeing in some of the other emerging markets.
That's well put. Peter, just give us the global perspective. I spoke with Chris yesterday, and he was saying that the big $28 billion that foreign investors have sold in India since the peak in September 2024. I mean, his point was it's all relative at the end of the day for global asset allocators. I mean, people have been chasing Taiwan, Korea, China earlier, on the back of valuations here, which have been expensive. Where are we purely valuation-wise? I mean, growth has to pick up. Nominal GDP growth has to pick up. And hopefully with these 3 things, 2 tax cut and 1 rate cut, it will happen. It will start to, come into view. Maybe second half or maybe next financial year, we'll have to wait for it. But as things are, where are valuations now, Peter? And is the valuation problem, are we close to sort of crossing that hump?
Why don't I speak a little bit about not just the valuation, but investor sentiment that we've seen really since mid-23 globally in the markets. I'm fortunate that I spend a lot of my time traveling the globe and speaking to global investors. And if I think back to kind of mid-23 into early 24, one of the main themes was from global investors the current concern not only of the performance of the Chinese market, but the volatility of that market. And it was clear that fund flows were going to move out of China into other markets. And those themes were really three. One was the Mag 7, money was moving there in the US, but it was also into Japan, given some of the reforms, and very much into India, which I saw getting more attention than I had previously seen in years. And we had global investors that were doing a lot of work on Indian companies and the Indian market. There was some concern on valuation at that point. It's interesting that, as Ashish said, the market here has been largely range-bound since our conference last year, which happened to have been the peak, I believe, of the market for last year. And we saw money leave India and head back into China. I would call that more of a trade. Where are we now? Well, if we look at valuations, the market right now is not trading at historic highs, and actually the premium versus the MSCI EM baskets is right where it historically has been. So I believe we're set up right now for a time for investors, and I've seen it here at the conference, who have come into India, who have not been here before, who are now trying to learn more about India, and they're seeing the growth. And importantly, what excites us is the amount of companies that are coming public, which is something the world needs.
A very interesting perspective.
What Pete just mentioned.
Sure, go on, Ashish.
So I think, even China markets and Korea markets doing well is probably a great thing to happen to the EM asset class as a whole, because last few years, the only market that was probably driving the EM rally was India. And we have seen a lot of outflows from EM funds. Given what has happened in the last 12 months in other EM markets, we are now starting to see, and a lot of investors have been talking about it, inflow of funds in EM markets. And of course, India also stands to benefit, rising tide lift all boats kind of a thing. So in a way, I think China and Korea doing well is also good for India.
Okay, that's a valid point. Take that point. But, let me ask you a bit of a counter. Peter, I heard your perspective, and that's great. But what I want to ask is that it's very clear that India cannot offer, as of now, in a very big, decisive way to global investors, tech or AI. I mean, you don't come to India to play tech or AI, right? So what are you telling global investors at this point in time? Why should they come to India? To play a bigger part of the consumer story? Do you think that's kicking off or reviving in a big way? Or is it going to be more about manufacturing, the whole China plus one, realignment of global supply chains? What's the narrative? And why are you telling global investors to look at the Indian market at this point? Peter?
Well, I think the narrative begins with India is now the world's fourth largest economy, heading to be number 3 with an emerging middle class, with an entrepreneurial culture where we have many companies that will be high growth companies that are coming into the market. The world is looking for new companies. Again, I would argue that we globally are overweight a lot of the, I would say, not just I'll be more specific than the broad Mag 7. You've got the hyperscalers plus NVIDIA. The world has been overweight that. We did see money go into Europe this year. But when you look at India, again, a growing economy, a populace that has an emerging middle class, that has a fantastic education system, and again, has this entrepreneurial culture. So it is a place that will continue to grow. And again, we're going to have more exciting companies to invest in.
Peter? I think from our conversations with investors, I think one of the things that is also coming across is last 20 years, India has been a pure consumption story. And the biggest pushback on India has been everything works, but infrastructure needs a massive upgrade. And at this point of time, we are on the cusp of a massive infrastructure upgrade. And it's a sector which has huge growth potential, be it ports, airports, power, hospitals. And all these are sectors which offer tremendous runway for growth with strong earnings. And that's what is exciting investors to look at India beyond consumption alone.
Ashish, you're doing lots of these feet on the street kind of trips over the last, yesterday, today, and I think tomorrow as well, right? showing investors some of the infrastructure projects in and around Delhi?
Well, everything, right from consumption to infrastructure. We've taken them to power plants. We've taken them to some stores. So yes, trying to give them a real look and feel of what's there on the street and not just in the conference rooms.
Yeah. Peter, just one question. Is the lack of AI, pure AI kind of plays in India, and because that is where money is gone in very, very large amounts, maybe some people are now starting to argue that it's too much now. And for example, Chris was yesterday saying that most likely this is not going to end very well. There's going to be huge capital misallocation, etc. I don't know if you share that view, but that's not the question. But in India, the lack of those opportunities, is that a bit of a disadvantage on an overall market perspective?
I would say, look, and I appreciate what Chris is saying about the CapEx investment into AI. I think that that story is yet to be written. We will see. When you look at India and the transition that Ashish has been speaking to, I don't think folks are looking at India at all as an AI play. And again, it will affect the services industry. But again, there are many other investments here in India that are attractive throughout infrastructure, consumer, etc. I think you'd agree with that.
Yeah, I would agree with that. In fact, Prashant, beyond the infrastructure theme, we are also trying to deep dive into some of the emerging themes. So our research team has put together an in-depth report on AI, the implications and the opportunity for India, also something on semiconductor. So yes, we are slightly late in the cycle, but I would not go to the extent of saying that India will not play any part on the AI in the longer term. We may not be the leaders, but we'll definitely have some companies. Ultimately, it's data from 1.4 billion people that will also go as an input for some of the AI models. So I'm sure we will have companies coming out of that theme at some point of time in the near future.
All right. Hi, gentlemen. Good to see you in, both Peter as well as Ashish. Ashish, coming across to you, though, on the fiscal as well as on the monetary side, we have seen a lot of support. And now the economy needs to revive. Second half of the year, in all probability, seems to be good. But what more are you factoring in, either in terms of monetary support or maybe on the fiscal side as well? Do you think there is more headroom, or do you think most of it is already done?
No, I think the government has been very, very proactive in reforms and giving the corporate sector what it needs to thrive and to start building. I believe the relative cost of borrowing in India has never been as low as it is today, given the interest rates having gone up in the rest of the world and India continuing to stay low with low inflation. So I think the opportunity or the backdrop has never been better. What we probably need is the corporate sentiment on the capex side to come back. So the government has done its bit. Can there be more reforms? There can always be more reforms. And the good part is, I think we do get a feel that the government is continuously working on what can be done better. But I think at this time, the baton is more in the corporate's hand to start reviving the capex in a more meaningful way, taking from where the government has done capex so far.
Sure. Okay. Gentlemen, I think the company that has listed today actually is a reflection of exactly what you gentlemen are saying, that there are enough opportunities in India. We may not have, technical, pure AI. Look at that listing, 62% pop urban company, which runs that platform, which offers everyday services, came into the market to raise about 1,900 crore rupees, and investors have welcomed it with open arms. And we have lots of celebrations there at the stock exchange going on right now. We'll keep getting you more inputs on this in a bit. But yeah, I completely take your point. I mean, Ashish as well as Peter, that you don't necessarily have to be in the most complex business. Even if you're selling, butter, cheese, whatever. If the business works, then investors want a slice of that. And that's what we're seeing. Peter, just a question on whether geopolitics, this whole India-US standoff over the last couple of months, if that at all is clouding the investors' decision making. Now, of course, there are better overtures. Some bonhomie started. But is that at all even a factor when people are looking at allocating money to India?
Yeah, I do think it is. I think it affects investor sentiment broadly. And I'm hopeful that it will be short-lived. I'm hopeful all of this will be short-lived. I think it's much more sentiment on when they actually start making the investments. It may cause a bit of a pause, but I believe that will be short term, much like it has been in other markets that we've seen, kind of a pause, if you will, in investment. I think once we get through the other side of this, the themes that we've been speaking about are very much in place.
So if I were to ask you, Peter, say over the next year or so till the next conference, which would be India's biggest, competitors when it comes to buying for foreign flows? Last year it was, the year before it was Japan, then it was South Korea. It's been China to an extent. Next 12 months, who's our biggest competitor in terms of getting those dollars?
I believe it's the same. I believe it's the same markets. I'm still having a lot of discussions around Japan. There are some, again, that we've highlighted about Korea. Recently, that's been less so. Europe had its moment in the sun, if you will, kind of mid-year on certainly the German fiscal reforms, the investments in defense, and the moving off of zero bound, on the financials. So those were themes, but the India and Japan theme to me remain the two major themes, and I believe we will be talking about the same thing this time next year.
Okay, as you put it, last time it was a bit of a turning point, almost was the last conference, right? When September was the high for the market here. Ashish, just to distill down top interest sort of sectors as you see it from here out, from an investor point of view in India.
I think financials, of course, continues to be the most talked about sector given the sheer amount of ownership. But the good part is investors are also very open and receptive and engaging on the new themes that are emerging. As I was mentioning, hard assets, hospitals, airports. We've seen a lot of traction on airport stocks conversation. We're seeing a lot of interest on the infrastructure theme, telecom and power. Power as an overall space, right, from generation to transmission to distribution. So I think some of these sectors are getting added. Consumption, of course, continues to remain at the top of the mind given the GST cut. So I think it's very broad-based. But the biggest question is, do we stick with the traditional growth sectors like financial staples and tech services, or we diversify into the new growth sectors, which is infrastructure and hard assets?
And maybe it's a mix of both, but both very much in focus, as you say. Gentlemen, we'll leave you to it. I've got a busy day ahead. Ashish and Peter, appreciate both of you coming on CNBC-TV18 with your perspective, mix of India and, of course, the global view looking into India coming through. We'll take a quick commercial break here. We're going to come back and put the spotlight on commodities as always. Manisha is here to help us with that. Stay tuned.
Welcome back. Let's talk about the biggest headline of the day and water listing by Urban Company. 67, almost 68% higher. The shares were offered at about 103 rupees, and look what happened. Manglam, we were just discussing this with the gentleman at Jefferies, right? You don't have to be in the most complex business of data centers or AI or whatever. You run your business well, even if it's consumer, and you price it well, and the market will give you such a warm welcome. But tell us more, just remind back, what's led to this kind of a huge pop today?
Well, it's a couple of things. One, the underlying TAM or the total addressable market is strong enough. And in that, this company enjoys the pole position of being probably the only one. So this is a market which is nearly 100% unorganized, sub 1% organized. And in that sub 1% organized as well, majority of the share lies with Urban Company. There is no real listed player here, forget listed peer or unlisted peer itself. And add to that, there was a big listing which was expected anyway because it was a 1900 crore IPO. The issue was subscribed 104 times. So there was strong demand for this IPO. Total subscription 103 times. QIBs went ahead and did 140 times. HNIs 74 times. We speak about retail investors, 39 times out there as well. And the most interesting thing for me was employees. So the employees of the company, they filled into the IPO, and that portion itself got subscribed by around 37 times. So when the employees of a company go ahead and, make their inroads for the IPO or make their offers or bids for the IPO, it tells you that there is a strong listing which is expected. So now at closer to 171, the market cap of the company is around 25,000 crores. They offered the company at around 15,000 crores, or nearly $2 billion as market cap. The only thing we'll have to watch out for are the valuations, because remember, basis what the analysts are expecting, if the revenue compounds at 35% as the management has been guiding, even if the adjusted EBITDA doubles from 1.7% all the way up to 3%, and the net profit that the company posts on a sustainable basis reaches about 250 crores, then it's trading at 101 times price to earnings. But then again, if you're growing much faster than the market, then who's to say that there is no upside to the estimated EPS as well for the company. The two triggers that I'll be tracking for them, their core margins, how they expand from here on, and secondly, the native business, which is growing for them. They are looking at becoming a full stack hardware supporter and supplier as well. If that business breaks even, then that could add further legs to this company. So let's watch out for Urban Company. Currently, on the day of IPO, because of strong demand, there is that fear of missing out. So that's why the stock's moving higher. Let's see how it sustains going forward.
Right now, already at 100 PE, right? Forward PE.
Yeah, currently 100 PE. It was offered at around 60 PE. Now it's at around 101 PE.
Okay, all right, Mangalam, thanks very much for that. So it's Urban Company in focus. Commodities next. Manisha is here with what is top of mind. Manisha, morning.
Morning, and thank you for that, Prashant. Well, I will talk about the lead up to the 25 basis point rate cut that the markets have already factored into the space then. And this is not something new. It's not going to be a surprise. The surprise is if he does anything less or more than that, that is the Fed Chairman Jerome Powell. But ahead of that, we have seen this constant decline in the dollar index, trading now below 97. It is a 2-month lows coming in for that. So as I said, 25 basis point rate factored in. And the street is also looking at more US Fed rate cuts in this year and the first quarter of 2026 as well. So there are some 4 or 5 being talked about. That is what the street is as of now haggling about. If you look at the currency markets to begin with, of course, the Indian rupee continues to hold around that 88 mark. But the global currencies also have surged given the fact that the dollar has continued to see a decline. So when you look at the euro, it's trading at a 4-year highs. You have a 4-week highs coming in for the Japanese yen. It's a 10-year highs that you're looking at in Swiss franc right now. The Danish kroner trading at a 4-year highs as well. So many of these high-yielding major currencies, the G7 currencies, are trading quite on the stronger note there. The Canadian dollar at a 1-month high. Swedish krona is doing 3.5-year highs on the screen right now. And you have a Brazil real, which is trading at a 1-year highs. That's all that I could fit in sense of currencies. But there are more and more currencies in the G7 and the Western world, in European markets as well, which seem to be doing quite positive to that run-up to the US Fed meeting there. I also want to talk about the gold prices because we're looking at a 41% of gain in this commodity in this year until time. We've seen an all-time high at $3,700 an ounce as well. And much of the gain really has come in the last couple of months itself. If you look at the gold prices on the kind of run-up that we've seen with 40% gains, it has surpassed inflation-adjusted peak that we saw in 1980 there. Markets also are looking at higher prices from here on. So when you look at the latest reports that have come in the last couple of sessions itself, you have Goldman Sachs talking about $5,000 an ounce. There also is a report from Commerzbank overnight which says $3,600 an ounce of an average is what they're looking at in 25 and $3,800 as an average in 26. So higher highs from here and absolutely a possibility. But it's not just about gold as well, because with the dollar decline, we're looking at silver trading at a 14-year highs. Copper prices at around 15-month highs. Zinc is trading at the highest level since March 2025. And you have crude prices trading at a 2-week highs as well. So when it comes to tangibles, commodities, everything is trading in the positive right now. Of course, it is going to be the Jerome Powell speech announcement today in the evening that the street will watch out for. But you will also watch out for the Fed's quarterly summary of the economic report, the Fed's dot plot as well in the evening today. And the further cues would come in absolutely from this one.
Okay, all right. So the all-important Fed announcement awaited by markets around the world. Thank you for that, Manisha. We do have to take a very quick break. On the other side, our special segment coming up, it's the economy. Latha today speaks with the Managing Director of National Bank for Financing, Infrastructure and Development on the state of infrastructure financing.